China's service sector picked up in December according to the latest PMI survey from Caixin and S&P Global. A solid rise in new business pushed the PMI to its highest level since July. That means there were more customers and they spent more. There was also an uptick in international demand for Chinese services, with an almost 30% jump in travellers from a number of countries with which China now has a visa-free policy. So all that leaves business sentiment in the service sector looking much healthier, particularly than the manufacturing sector. But it wasn't enough to lift the Chinese mainland stock markets today. The Shanghai Composite Index declined nearly 0.5%. The Shenzhen component was down by 1.25%. The data couldn't even keep a floor under China's bellwether consumer stocks, the big liquor makers. Guizhou Maltai shares were down 1.5%, and rival baijiu maker Luzhou Laojiao shed 3.3%. There was also a strong outflow in foreign investor funds, with a net 6.5 billion yuan worth of A shares sold on the Stock Connect links before the lunchtime trading break. Yesterday, Morgan Stanley analysts pinpointed a recent trend of global long-term investment funds pulling money out of the Chinese markets, both the mainland and Hong Kong. December was the worst month of 2023 for those outflows, according to Morgan Stanley. They hit $3.8 billion. A bit more than half of that was investors redeeming their own money from funds, and the rest was the funds diversifying away from Chinese equities. Today, the Hong Kong markets were fairly tepid. The Hang Seng closed flat. Tech stocks there made a late bid to follow their US counterparts higher, but they didn't quite make it. Alibaba added 1%, but did not match the stronger performance of its US-listed stocks. Food delivery giant Meituan shared a little under 0.5%. We were just talking about China's service sector and consumers. Well, one area that's been doing pretty well are the country's bubble tea makers. Two more of them, Mixue and Guming, have applied for IPOs in Hong Kong. Guming is looking to raise up to $500 million, while Mixue could be targeting up to $1 billion, according to Reuters reports. It seems pretty certain this money is going to be put into a rapid business expansion, with one study forecasting sales growth for China's bubble tea stores surging 40% during 2023. Over in Japan, the Tokyo markets finally reopened after their New Year trading holiday. But despite a stellar year last year, the sentiment at the start of 2024 has been low following the earthquake that hit western Japan this week and the collision of two aircraft in Tokyo on Tuesday. The quake sent Japanese nuclear power plant stocks lower. Hokuriku Electric Power operates a nuclear plant near the quake's epicenter. Its stock fell as much as 8% today, but clawed back some of that before the close to end 2.2% lower, while TEPCO, which operated the plant at Fukushima, fell as well.